Hello, this is Patrick White from AA Commodities and Investments of Spencer, Iowa, with your Thursday, October 24th market recap. As you can see here, we were lower on the day here, lightly lower. We had December corn down 1 cent at 386 3/4. November soybeans were down a half a cent at 933 1/4, and December Chicago wheat was down 4 3/4 cents at 516 even. I'm going to go ahead and get it started off with the disclaimer here. Just a reminder that everything I'm talking about today is just my opinion and that there's no direct trade recommendations, anything like that. If you would like to read the full disclaimer, please pause the video now. So as you can see here, we had a lightly lower day in the markets, between corn, soybeans, and wheat. Really, we've been in a bullish leg here these last couple of weeks, a bullish leg higher, and we're in sort of an interim correction of those highs that we've seen here so far this fall. And I'm going to go ahead and get it started off with TradeStation talking about advantage alerts here. This is the continuous corn contract, and as you can see here, these white dots signify our spot or our advantage indicator recommended corn sales. So we were recommending sales between October 2nd and October 10th until the WASD there. And really, we've seen our nice corrective phase go down here in the corn market. And so obviously we're not in an advantage alert, as you can see down by the ellipse on this indicator here. But with that being said, that could definitely turn back higher here if we do get some positive price action. And over on soybeans, kind of the same scenario there. We had the advantage indicator trigger on the 3rd of October, and it shut off here relatively recently, about a week ago, on the 17th of October there. So, since basically the market, if you take a look here, really, I'll blow this up here a little bit. If you take a look, really the market hasn't done anything but trade sideways and really haven't gotten any solid closes towards the highs, like we saw in the past in the run-up. So obviously the indicator shuts off during consolidation. So not recommending any cash sales at this time as far as the futures market goes, but still pretty decent areas if you feel really, really behind. But that being said here, we had a lower day. I'm going to go ahead and get it into the charts here. Going to go ahead and start off by talking about December corn. I had a nice, obviously from September into October, we had a nice push up. The market got above this 396 resistance zone for one day. They tested the 401 level, and there's been sellers up there so far. I've got support pegged in the newsletter at 385 to 386 area. And excuse that TradeStation alarm, it's 3 o'clock here. At the 385, 386 area. If we do trade below that, we'll probably head back down to this old low of 380 to 381, which is the low after the October 10th WASD there. So, not a whole lot, just a corrective phase in an overall bull move here for the December corn chart. Going on into the November bean chart, we've obviously had a pretty good. If I can get this recentered here, we've had a pretty good run up here. We've basically just been, the market's rallied essentially from September into October here, and the market's playing with this June 18th high over here of 945 or so, give or take, 948, 945. The markets went up and tested that 2 separate times, posting a high of 948.5 on the 14th of October, and then on the 22nd here, 945 1/4. So really, we've seen a lot of sellers being active above 940. The buyers have been active, at 928 to 930. And really just the market is lacking in fresh news at this time to close, anywhere other than close to unchanged here this week. It's just been really slow with a lot of, choppy consolidation type action. And why can't we get a close near the highs? Well, there hasn't been anything, put pen to paper as far as a trade deal goes, as far as a phase one deal. That's still about 3 weeks away at the APEC meeting here in mid-November. I believe it's November 15th or 16th down in Chile. So I think, we're just kind of seeing a lot of indecision between traders in the soybean market, and that's why we haven't seen, a decision really for these last basically 8 trading days. So, I do think if we do sell off, we'll probably support down here at the 923 to 919 area. There was some pretty solid resistance there in the past. If we do rally, obviously we're going to be looking again at the 945 region. If we break up above there, 950 to 953 is another pretty good psychological area. And then ultimately, the big target would be that 965 area. And that's the area that we struggled with in December of 2018 and on into February of 2019. Alrighty, and we're going to take a look at December Chicago wheat. Wheat, obviously we've had a really good move higher here, and just really it's been led by the world wheat futures prices, and that's been led by the strong export demand out of Egypt, and basically Russia's getting the lion's share of the wheat exports, Russia and parts of France, things like that. The U.S. has been a follower this whole time. And I think, obviously the wheat market, we've seen a good run here. Traders are just profit taking. We've seen, for the most part, we've seen these interim support levels support here. I've got newsletter newsletter support in here at 515, and the market respected that today. If we don't hold 515, we're probably headed back down to this 200 period moving average area of 503 to 505, and you can see we had some resistance in there before. And it's really the wheat market has stayed strong on good solid world export demand, and the world importers keep continuing to pay up for wheat. We'll see if that trend continues. If it doesn't, we could be in for a gut check for the longs at least. But I think overall the trend is definitely still higher for the wheat market. And I think if you're long in here, you really don't want to see a close really before or below this $5 level, but we're a ways from that. And like corn and soybeans, we are kind of in this sort of an interim correction phase. We did see sellers up here at this 535, 536 area, which also matches this high here from last July. So if we do start to rally, if we do find support here and rally back, we'll obviously be targeting the 535 region as the first level of resistance. And then above there, really, you could see some sellers come in at this 555, 557 region as well. And that matches the old highs from June in the summer there. So heading on into cotton. Almost forgot about cotton. Today, kind of an interesting day for cotton traders. We went up. Well, first of all, this fall we've seen a nice, good, solid bull run here. We've seen resistance. We've seen sellers up here at 65.50, 65.55 is what it is in the newsletter. We saw that perfectly today. They went up and tested 65.55. Well, exactly. I guess that was the high, and reversed from there. Obviously, buyers are supporting this thing around the $64 level. That's another support level that I've got in the newsletter there as well. So I think as long as 64 stays in, there's going to be a lot of I think the bulls are going to be happy. What you really don't want to see is a close below, probably the $62 area, and that's the area where we basically initially broke out of in early October. So, but yeah, still, likewise, the cotton market, this trend is still higher. I think, buyers are probably going to still support cotton. But we'll just have to see, if they can get above the 65.55 area. If they can, they're probably headed up to this 67.70 region. And if you look, that's also pretty close to the 200 period moving average. And why did I pick that number? It's not just a guess. I guess we got this, we had these last couple of rallies here in June, and parts of July here that stalled out in that 67.70 area, 68 level, maybe call it. But if we break out here higher, we can target that area. If we go lower, we're probably headed down to support the 62.50 area, $62 level. You definitely don't want to see a close below there, or 61.50 as well. So. Alrighty, going into the livestock market here, had a pretty good sized run here. Obviously, live cattle are still pinned inside their uptrend. We had a nice breakout up to this up above the 114.50 region, and if you notice, we did sell off, but we held that region there today. So, this is the highest price that we've seen in live cattle basically since May 2nd there. So pretty nice to see that good sized run there, especially after the Tyson fire, and we've broken through the resistance from above there. I guess as far as the next area goes, didn't have it marked out for you, but I've got the 117.10 level. Got that 117.10 level pegged, and that, as you can see here, we saw some sellers up there early on in the life of the contract. And yeah, I think December live cattle, obviously they're still pinned in their uptrend. We've got plenty of buyers supporting this thing because they think there's going to be a supply shock in the fourth quarter of this year. And we're just seeing traders mark up and find value much higher than where they've been. So yeah, let me reiterate here. We found buyers here at 114.50. We're probably going to go up if they want to continue to rally this thing and test this 117.10 region. If we do sell off, You're going to see, we're going to see us lose the 113 region, and we're probably going to see some pretty decent support in here at 111. If they break that, I don't know if you want to be long at that point, but I guess we'll assess if it gets there. So, and over on the hog side of things, really looked pretty good when we had, this breakout day on the 15th, but obviously the breakout there failed. The market is still struggling just amid, the U.S. And the U.S. has some pretty good supplies of pork, and slaughter figures have been about 1 to 1.5%. Slaughter weights have been 1 to 1.5% higher than what they've usually been, and basically, just the market is choking on the U.S. Domestic supplies and exports. Everybody's been thinking that they were going to come in and be the savior for this market. Well, they haven't. They haven't been, and the higher than anticipated supplies are still just dogging the hog market at this point. We've got some decent support in here at 63, and that's really just the middle of this choppy sideways consolidation type of range here. I think 63 is a decent area. If we break below that, we're probably headed back down to the $60 to $58 region. But if we do rally, I think we're probably going to have more resistance up here at this trend line, and I would really like to see us have another good run at this trend line and see if we can get a break above it and get back to testing that 72 to 72.50 level. My ultimate target, as I've talked about for a very long time, is the 74 region. But we'll see if we can hold in here. Certainly the something's going to have to happen here as far as weights are going to have to get less, or there's going to have to be a supply threat because demand, even though it's been a lot higher than normal, it just ain't cutting it. So that's about all I got. If you guys want to learn more or sign up for my newsletter here, you can learn more at aa-commodities.com. Other than that, thanks for watching, and have a great day. Appreciate it.